From its mysterious inception in 2008 to becoming a global phenomenon, Bitcoin has evolved, challenging the traditional notions of currency and finance. Today, we dive deep into the heart of the financial revolution, Bitcoin. Get ready to embark on this journey like no other. So buckle as we delve into the most complete explanation of Bitcoin ever. What is Bitcoin? Bitcoin, BTC, is a cryptocurrency, a form of digital money that can be used to make and receive payments without being controlled by any one person, organization, or other entity. This eliminates the need for third parties to get involved in financial transactions. It may be acquired on a number of exchanges and is given to blockchain miners as payment for validating transactions. Under the pseudonym Satoshi Nakamoto, a group of mysterious engineers unveiled Bitcoin to the world in 2009. Since then, it has grown to be the most well-known cryptocurrency globally. Numerous additional cryptocurrencies have been developed as a result of its popularity. These rivals are employed as utility or security tokens in other blockchains and cutting-edge financial systems, or they try to take its position as a payment method. Moving on, let's take a look at a simple understanding of Bitcoin. How does Bitcoin work? Under the fictitious moniker Satoshi Nakamoto, an individual or group said to the metsdao.com cryptography mailing list in October 2008, "I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party." The now famous white paper Bitcoin, a peer-to-peer electronic cash system, which was posted on bitcoin.org, would serve as the foundation for how Bitcoin functions today. The mining of first Bitcoin block. The first Bitcoin block, Block 0, was mined on January 3, 2009. This is sometimes referred to as the Genesis block, since it has the phrase, "the times 3rd of January 2009, Chancellor on brink of second bailout for banks," which may indicate that the block was mined on or after that date. Divisions of Bitcoin. A Satoshi is the smallest unit of one Bitcoin, which is divisible to 8 decimal places, a 100 millionths of one Bitcoin. At some point, Bitcoin could be divided to even more decimal places if required and approved by the involved miners. Rewards. Every 210,000 blocks, Bitcoin incentives are cut in half. In 2009, for instance, the block reward was 50 more Bitcoins. The reward for each block discovery was reduced to 6.25 Bitcoins on May 11, 2020, following the third halving, which is anticipated to take place sometime in 2024, and raised the reward to 3.125 Bitcoins. The blockchain technology. It's not too difficult to comprehend Bitcoin as a digital currency. If you possess Bitcoins, for instance, you may transfer smaller amounts of those Bitcoins to pay for products or services using your cryptocurrency wallet. That gets rather complicated, though, when you try to figure out how it operates. Part of a blockchain and the network that powers it are cryptocurrencies. A distributed ledger, or shared database, is what a blockchain is. Encryption techniques are used to safeguard data on the blockchain. On the blockchain, when a transaction occurs, data from the previous block is transferred to a new block with the updated data, encrypted, and the transaction is confirmed by network validators or miners. Once a transaction is confirmed, a new block is formed, and the miners, who validated the data in the block, receive a reward in the form of Bitcoin, which they can use, keep, or sell. The encryption of Bitcoin. Bitcoin encrypts the data kept in the blockchain's blocks using the SHA-256 hashing algorithm. To put it simply, a 256-bit hexadecimal integer is encrypted with transaction data that is kept in blocks. All the transaction information and data associated with the blocks that came before that block are contained in that number. How to mine a Bitcoin. Bitcoin may be mined using a range of hardware and software combinations. When Bitcoin was initially published, miners could compete to solve the hash on a single computer. But as the network grew in popularity, more miners joined, decreasing the likelihood of being the one to solve the puzzle. If your computer has more recent technology, you can still utilize it as a miner, but your odds of solving a hash on your own are quite slim. This is due to the fact that you're up against a network of miners that produce around 444 quintillion hashes, 444 exahashes, each second, or random number production. Known as Application-Specific Integrated Circuits, ASICs, these devices are designed with mining in mind and are capable of producing up to 335 trillion hashes per second. A machine with the newest hardware, on the other hand, hashes about 100 megahashes, or 100 million, every second. In order to mine Bitcoins successfully, you have a few choices. You may join a mining pool and use Bitcoin-compatible mining software on your current PC. In order to compete with massive ASIC mining farms, mining pools are collections of miners that pool their computing power. An ASIC miner is an additional option if you have the money. A new one would usually set you back about $10,000. But as miners improve their systems, they also sell older ones. Buying one or more ASICs will come with some substantial expenditures, such cooling and power. How long does it take to mine one Bitcoin? The mining network needs 10 minutes on average to validate a block and provide the reward. 6.25 BTC is the Bitcoin payout for each block. This means that mining one Bitcoin will take around 96 seconds. How do you buy and use Bitcoin? It is possible to purchase Bitcoin using a cryptocurrency exchange if you would rather not mine it. Due to its high cost, most individuals won't be able to acquire Bitcoin in its entirety, but you may buy smaller amounts of Bitcoin on these exchanges using fiat money like US dollars. For instance, by opening and financing an account on Coinbase, you may purchase Bitcoin. Your bank account, credit card, or debit card can all be used to finance your account. The phrase Bitcoin accepted here is typically shown on signs outside of physical businesses that take cryptocurrencies. Transactions may be completed via touchscreen applications and QR codes, as well as the necessary hardware terminal or wallet address. The start of trading and investing. As Bitcoin gained popularity, traders and investors started to show interest in it. Exchanges for cryptocurrencies that allowed people to buy and sell Bitcoins arose between 2009 and 2017. Demand increased gradually as prices rose, and in 2017 the price broke $1,000. Many started purchasing Bitcoins to hoard because they thought the price would keep rising. The market took off when traders started making short-term deals utilizing Bitcoin exchanges. The price of Bitcoin plummeted in 2022. It peaked in March 2022 at $47,454 and dropped to $15,731 by November 2022. After that, it bounced back in 2023, reaching a high of $31,474 before falling below $30,000 once more. Following a decline in other assets, Bitcoin saw a decline as a result of broader market turbulence brought on by increasing interest rates, inflation, COVID supply chain problems, and the conflict in Ukraine. Concerns over the stability of digital currencies have also been raised by the significant token crashes in the cryptocurrency space, as well as the failure of a significant exchange. Moreover, there are many risks as well when it comes to investing in Bitcoin. Due to the sharp price increases, Bitcoin has attracted the attention of speculative investors. On December 31, 2019, the price of Bitcoin was $7,167.52. It kept rising during the first half of 2021, reaching a record high of $68,990 in November of that year. Over the following several months, it steadily declined to hover around $40,000. Its price continues to swing significantly, as previously noted. Therefore, rather than using Bitcoin as a means of trade, many people buy it for its investment potential. To stay updated on all things crypto, subscribe to our channel and ring the notification bell. Your journey into the complexities of Bitcoin is just